In this video, traders, I want to talk about a short video clip I saw of Stanley Druckenmiller when he was saying, hey, you should have a trade thesis and then you should slug. So how does that relate to day trading? Stick around. Hey guys, warm welcome to you. All right, so I saw a short video clip. I think it was on Twitter. I wish I could remember where it was, or I could stick it in the description or get it stuck in the description. But I'm sure maybe you could Google it and find it. But it's a short video clip and it's a little interview with Stanley Druckenmiller. And he's talking about all sorts of things. This clip's just kind of pruned this little section. And it basically says, hey, and he was talking about, because he's worked with George Soros, he's talking about this is George Soros's approach as well when he was an active trader or money manager. You know, he has to create a trade thesis. And then he goes on and says, hopefully it's a thesis that no one else has. And then when that thesis proves to be right or starts to be right, then you slug. In other words, the baseball analogy of, hey, you hit the ball really hard or you start to trade bigger and more aggressive. And it got me thinking. I thought, that's interesting, because, you know, when you're day trading, what are you trying to do? You're trying to say to yourself, right, what's your thesis? You kind of come up with an idea, and maybe the market's kind of doing this, and you say to yourself, hey, listen, you know, if the market tries to retest that low and fails, I'm going to buy it and I'm going to see if we can push back up to this opening print. And that's your thesis. Now, okay, slightly different, of course, with day trading, but the earlier you have the thesis and the earlier you are, the more juice you're going to get in the trade. Right? Because the only way that the market's going to go up is if people buy it after you've bought it and cause the price to go higher. So you've got to have a thesis and have an early thesis. So not unlike, you know, what Stanley Druckenmiller was saying, you've got to have a thesis that no one else has got. And then when it starts to be proved right, the trade goes in your way. So let's imagine that your thesis is, hey, we double bottom and we start to rally. So price starts to come lower. Maybe it fakes out and it starts to rally, and there's your long position, right? There's your long. And your thesis is, hey, that long's going to hold, I'm going to come back and we're going to tag the opening print, or whatever that level may be, whatever price target you've got. So great, you've got your thesis, you're early, you've got a thesis that maybe others don't have because you've caught a reasonable amount off the low, and the price starts kind of suddenly ripping up and doing this. Now, the next part of that quote was then slug. So slug, I can interpret it to be hit it hard. You know, when your thesis is being proved correct, do not be shy. You should be pressing your advantage. How do we translate that into day trading or intraday active trading, or no, say intraday active trading? That means adding more size. That means getting bigger on your positions. That means when you're proved right, that you push the throttle down and you get the size on. You start to be more, and obviously guys, you understand they've got to have risk controls. I'm not suggesting that you start playing this game if you're still developing trader and finding your feet on this other stuff. But for your more experienced traders out there, maybe it's something to consider. You know, so this is a similar thing of like, hey, the thesis is proving to be correct. Let me add more size. Proving to be correct. Let me add more size. When you're correct, ding, and you make significantly more, because that's the key with investing and trading and any kind of risk-based decision, is that you want to make substantially more. Now the goal is to make substantially more than you, right? I know it's easier said than done, right? I know to make substantially more, you've got to have a lot more reward than you have risk, and you've got to add to the position, but you see how those compound. And so that when you're right, not only are you right by saying your multiple of risk reward that we talk about loads of times, there's your risk, there's your reward, fine, you structured the trade well, but you're also in more size. Now, does it always go that way and always work out? No, of course not. Often it's going to come up and it'll come down and stop you out. So you've got to manage the risk and adjust the trade with it. And I've done videos where I've talked a bit more detail about maybe the operational side of doing this, adding to trade. But I wanted to put it into this kind of broader concept that I heard of, hey, you know, get your thesis. When your thesis is starting to be proved right, then slug. And it just sat with me in my mind, and I thought, you know what, that's a video number one, and it's something to think about in my own trading number two. But it's really that concept of have an idea in trading. I think the price can go from here to here is generally the idea in trading. Or I think the price is going to close at lows or close at highs. You know, something that I often think about. So I think I'm going to close at lows, well, I'll hold this. And so when the trade is starting to work, you then go, yeah, hey, the idea was right, and move. And I think the thing is with newer traders, and guys, I've been here before, you know, and I think this is human nature, is when this trade starts to go away, we get worried, and as soon as it starts to kind of pull back a little bit, we close it. And so we're doing the opposite of what we should be doing, which is slugging. We're playing defense. We're like, hey, the thesis is right. Yeah, it's great. It's working. It's working. Oh, but I'm scared of losing it. And we end up coming out of the trade. And then we end up just ruining the whole structure of profitable trading, which is making a lot more on the winners. We can't do it. We just physically can't do it because the numbers don't stack up. So we have to be in this position where we're making many, many more times on our winners and losers. And you've heard this before. It's not a novel concept I'm sharing here. Guys, run your winners, make run your winners, all this kind of stuff, risk reward ratio structure. But you're thinking about it from a active trading perspective, having that thesis, when the trade is going right in your direction, slug. And I think most people struggle with that, and it's tough. It's tough to add to positions, but that is a differentiator. That's when you're going to make, several hundred times more. Sometimes 100 times more, but let's say losing £100 on your losers. You can quite easily then be making £1,000 on your winners, because let's say the risk reward structure is 5 to 1, and then you're doubling the size or trebling the size. Not the whole thing, obviously, but you start adding the size. All of a sudden, it can become a bigger trade. And so thinking about that, what's your thesis? How far does a trade have to go to start to prove your thesis is being correct? Because you don't want to be adding up here, that's far too late, but, okay, I'm being proved right. Yes, it's starting to rally. Oh, okay, great. Adding to the position and really pressing your advantage. Now, of course, it doesn't always work, and sometimes it comes back and you're going to get caught out, but it's something to really think about and consider. If some of the top guys out there were doing this and thinking about this from a longer term trade perspective, and we've seen some of the greatest trades have been where people have pressed their advantage. They're right, they've got more, and it's turned out to be a monster trade for them. Now, these don't have to be monster trades on each trade, but we can just tip the scales in our advantage a little bit more and just be making a little touch more. Just start off with a little bit more, a small add to the position, press the advantage a bit, and then build up to the whole slug, which is like putting the whole thing on, try to swing for the fences, all that type of stuff. So interesting concept. I thought, yes, that's really, really, really apt for active trading, day trading, whatever type of trading you enjoy. Take care. See you next one. Keep your risk managed. Bye-bye.